Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and time to get your mutual fund portfolio queries answered because there are a plethora of funds available in the market to invest your hard-earned money in. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at, and how should you select a fund related to your financial goal? Now, to help you navigate through this maze, today I have with me Shweta Rajani, Head Mutual Fund, Anand Rathi Wealth. Just in case you want to also send across your portfolio queries, get your life financial planning done with us, you can WhatsApp your question on 8657974571. You can also email us your question on themoneyshow@etnow.tv. Hi Shweta, good evening and welcome to the show. And let's take our first viewer's question, and that is Mitali. Mitali has shared her portfolio details. She has Parag Parikh Flexi Cap 6,000, SIP SBI Blue Chip 5,000, Axis Blue Chip 3,500, Nippon India Small Cap 3,500. She is also planning to add on another SIP of 5,000 rupees in a new fund for another 10 years. She wants you to review her portfolio so far, and I don't have the exact detail of the corpus or her risk profile, but then so far whatever information we have, how does the fund mix look? Actually, it's pretty diversified and balanced in terms of having the right approach in equity. What would you say?
Yes, Kavita. If I'm just looking at the schemes, it's fairly well diversified in terms of, having different asset classes, having different market caps in the portfolio, different asset management companies, and also the kind of funds she have, they have different styles of investing. So from that perspective, yeah, I would say she's, 8 on 10 of where she should be. Some suggestions from my end. She can continue with the Nippon and the Parag Parikh fund, but the SBI and the Axis Blue Chip fund that she has, she can actually stop her SIP there, as well as if it's completed the exit load period, redeem from those two investments. Instead, the funds that she can look at, I would suggest she can look at a quant large cap fund. She can also look at, having maybe a Aditya Birla multi-cap fund, as well as a ICICI Pru Focus Equity Fund. So, also because she's looking at adding up to her SIP, these three funds she can add on to her portfolio.
All right, since we don't have her on the phone line, I would just request her to get a better planning done for herself, Mitali. And, it's also good that you can line up your goals and, quantify them in terms of corpus that you want to accumulate and the kind of navigation across asset classes or strategies that you might want to have later on in life. Let's move on, Shweta. We'll take Bhargavi's question. She wants to make a corpus of 3 crores in 20 years. And for that, she needs to restructure or step up her option, her portfolio in mutual funds. She has a few funds in her portfolio. She has Nippon India Power, 5,000 per month she's putting. Aditya Birla Sun Life Flexi Cap, she has 1,000 per month. Kotak Equity Opportunities, again 1,000 per month. And ICICI Pru Large and Mid Cap, 1,000 per month SIP. Nippon Multi Cap, 1,000 SIP. Mira Asset Large Cap, 3,000. And Kotak Flexi Cap, 4,000 she's putting. SBI Blue Chip, 4,000. And she's also investing in NPS, 6,700 per month and 50,000 yearly. So that's her entire portfolio. I think very well good on the clarity part as far as the goals are concerned. 3 crores in 20 years. What's the investment amount actually needed for that amount of corpus in 20 years? Ideally, how much should she be investing?
Yes. So, yet again, Bhargavi, good thing is you're clear with how much you want, to target in terms of your goal and in what time period. You also have, done equity and debt with a larger orientation towards equity, which is very good. I was doing, some basic computation. Now the goal is 3 crores and you're roughly doing 27,000 per month of an SIP. If you continue doing this, you will get to, somewhere around 2.6 crores. But what is needed is if you can do a step up of 10% every year, that will take you, upwards to around 4 crores of goal value. So then you'll be able to surpass the goal that you've set. So look at stepping up your SIP by 10% every year. That's, my one recommendation. Coming to the schemes that you've highlighted, I would just suggest some schemes which you should exit. Now, these are, some schemes which have done well in past, but given the size constraint and, various other factors, they may not be good to continue with. So stop your SIP, in Nippon Multi Cap, Kotak Flexi Cap, Mirai Asset Large Cap, SBI Blue Chip, and Aditya Birla Flexi Cap. So these are the schemes where you can stop your SIP. Instead, where you can do a new SIP, I would suggest go in for a Kotak Multi Cap, go in for an SBI Contra, HDFC Flexi Cap, and an Invesco Small Cap Fund could be an addition to the portfolio. So that's my recommendation to you.
Okay. Let's move on and let's take Nandini's question, and she's from Bangalore. She writes that she has invested 3 lakhs in PPF accounts for both herself and 9-year-old son. However, she is seeking alternate investments to potentially achieve better returns. She's 48 years old and son is 9, and she's having a long-term investment horizon. Additionally, she has SBI Life Insurance policy for her child, initiated in 2015, and the premium is almost around 2,84,000 per annum, and the tenure is 18 years. And she wants to know if she can really continue this policy, SBI Life policy. Is it the best option for her, or she should be investing somewhere else to yield better returns in a time frame of 7 to 9 years? And she's really heard a lot about index funds. So, interesting question. I really wish that I had Nandini on the phone line with me, and it's very nice that she's talking about her retirement, or maybe her financial planning, and also to secure the future of her 9-year-old son. But then how does one go about it? SBI Life policy, I want your take on that first, and after that, since she has 3 lakhs in PPF account, would you be recommending her to, remove some chunk of money from there, invest in equities or something like, because it's anyways debt, and if she has a time horizon of 7 to 9 years, maybe she wants to have slightly aggressive approach towards earning or yielding profit on a portfolio?
Yes, Kavita. So, basically, I think while she's going in the right direction, Nandini, what you need to do is just list down your goals in value terms as to, for your child's education, how much would you need maybe, 10 years down the line, and for your retirement, maybe 15 years down the line. What would be the value that you would need? That will just help you in strategizing and planning your investments. But coming to the specifics, I'm not too sure which SBI Life policy do you have. It could be a traditional policy, it could be a ULIP policy. But I'm just going with my experience of insurance policies, how they've delivered. So my recommendation here would be that you should separate out insurance needs and investments needs. Okay. So what may be good for you to do is have a term plan with a larger cover, which you would get at fairly cheaper cost than what you would be getting in this traditional or a ULIP policy. So stop the SBI Life and separate out your term insurance with a higher cover. Do your investments separately through equity funds. That, in my experience, combination gives a better outcome in terms of return. Right, so stop your further premiums. Also, you said PPF. If you're doing a 3 lakh investment per year in a PPF, then let me tell you that it's just 1.5 lakh that gives you a tax exemption, including you and your child. So anything more than that, you should not do. But doing a PPF investment is a good debt allocation. Continue doing that. Right, you have a 10-year horizon. So I'm coming to the asset mix that you should have. You can have around 75 to 80% invested in equity and the balance in debt. Now, debt would include, your PPF as well over there. Coming to the equity funds, where you can, park your money, any lump sum that you may have, as well as a discipline, please keep doing SIPs. That is a very good habit to build in. Some of the funds don't go in for an index fund, because if you go for a diversified funds, you can expect 2-3% return higher than an index fund, especially if you're looking at 8-year and 10-year kind of horizons. So instead of a large cap index fund, you can go in for a large and mid or a flexi cap kind of a fund. So some funds that you can opt in for, I would suggest you go in for an ICICI Pru large and mid cap fund, and HDFC Focus 30 fund, go in for a Kotak large cap, go in for a Kotak multi cap. So these are the 4 names you can start with, and then as your corpus increases, you can look at further increasing your portfolio. So Nandini, that's my recommendation for you.
All right. right, on that note, it's time up on the show today. Shweta, thank you so much for being on the show and answering our viewers' portfolio queries. And I'm going to leave our viewers with our WhatsApp number and email ID where if you want to send across your portfolio queries, you can do that. WhatsApp number is 865-797-4571 and the email ID, themoneyshow@etnow.tv. Thank you so much for watching. Goodbye.